Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with John Antonucci. That's Pastor John Antonucci, and we have so much to talk about today. A lot is happening around the world, which really pertains to your finances. So we're going to be talking about that real soon. But welcome to the show, John.
Great to be in studio with you, Alfie, and welcome to Saving the Investor radio show with Southwest Florida's certified financial planner professional. You know, Alfie Townsend has over 40 years experience as a CFP, and Alfie and his team are dedicated to helping investors just like you navigate the complexities of the ever-evolving investment landscape, and today is no exception. We've got a great show for you planned, and if economic uncertainties have put your financial decisions on hold, you really need to grab a hold of Alfie's toolkit. It's absolutely free, and it will transform your worries of retirement into confidence. You know, inside Alfie's toolkit, there's a wide range of materials such as, will your money last as long as you do? You need to know the answer to that, especially if you're a retiree or soon to be retired. Are you paying too much in taxes in retirement? If Alfie can reduce your tax liability, that's going to put more money back in your pocket each and every year. The Social Security Decisions Guide, and will a recession rob your retirement? To get Alfie's free toolkit, all you have to do is text the word KIT, K-I-T, and if you don't text, you can just call the operator and ask for it. Text or call the word KIT to 239-747-1077. It's time for a worry-free retirement. Get Alfie's toolkit today, 239-747-1077. And Alfie, as we are into the month of May, we're still in high inflation, still in high in interest. No Fed cuts. They were projecting cuts, projecting a recession. All of these things, nothing is really happening. It seems like gridlock. It sounds like it's an election year, doesn't it?
Oh, it is, and that's I think Biden would love to have some rate cuts now to get this economy really up and running. The economy is moving, but it's not moving as fast as it was a few months back. So, but inflation is really sticky right now. It is not coming down, and it's, some parts of inflation, John, is coming down, but a lot. If you go to a grocery store, we talk about going to the restaurants, you're going to spend $100 a person minimum at a restaurant. And it's just that used to be fine dining. Now it's just dining.
It's Kentucky Fried Chicken, right?
Yeah. Now I did go to P.F. Chang this week, and they have some specials there that was pretty good. So if you haven't been to P.F. Chang in a while, go take your
portions have gone down.
No, not really. Go take your date to P.F. Chang, and there's some good things over there. But let's talk a little bit about the Federal Reserve. Are they going to be? We had a call not too long ago, a couple days ago, and it was Money Manager, and they're talking about the Feds and cutting rates, and there were supposed to be 6 rate cuts this year, 6, and so the markets were priced for 6 rate cuts, and then all of a sudden, rates started just staying the same. And then it went to maybe 5 rate cuts, then it went to 4, then it went to 3. Now it's probably not going to be maybe 1, 2 if we're lucky by the end of the year. And that's what drives, the interest rates down, drives markets up, and especially growth stocks, because they look for investing money in growth stocks, and it's, to grow, and that's not happening right now.
Yeah, it's not happening. And also, GDP is at a staggering motion as well, and that affects the economy as well. And people really are seeing the market flooded with all kinds of money from Washington. They keep voting on packages, money we don't have.
Yeah.
So how can you reduce the inflation if they don't cut back on their spending? If the American public are cutting back on their spending, the government has to follow suit soon in order to get these rate cuts, don't they?
Yeah. Now in Europe, the UK, they kept their key rates the same. They did not cut rates. That's at 5.25%. That's what their current rate is right now. But they did say that, in the coming months, possibly lowering their rates in June. So that sort of helped the markets over in their overseas. So, there's a lot going on. The main thing, we're going to talk about this, and in the show about, having a portfolio that will withstand. You can take risk you can take risk and you can take double the risk, but does that mean you're going to get double the return of a portfolio that is not as risky? And this is an article that I read, and we dissected into it. And this is Warren Buffett's policy: is you take educated risk and calculated risk, but you don't try to hit these home runs all the time. You try to hit the home runs all the time. Remember, when you lose 10, you have to make 11 or 12 to get back up to where you were, 13%. So it's not as easy as it seems to always take risks and think you're going to get double because you're taking double the risk. So we're going to talk about that. A couple other things we want to talk about is, a lot of people, John, they talk about real estate this, real estate that. You make a lot of money in real estate. You can, but commercial real estate right now is, I was talking to Drew Steele a couple weeks ago, and one of the tips was not to really, I wouldn't do real estate investing right now with commercial real estate, these REITs, and because, again, you have these values are going down in real estate because people are working from home. A lot of people are working from home. They're not filling the spaces right now.
Right.
So there's a lot of issues going on with that. And now they're taking these loans and they're refinancing these loans, and these loans are coming due now. So there could be, if we see a bubble, I think that's where I see a bubble.
Is in the commercial sector.
In the commercial sector. So you got to really. What we do here at the Advantage Retirement Group, we look at everything. We're going to look at your accounts. We're going to say, okay, the market's going to go up and down, but we got to make sure where you're taking income from is not going down. Okay, so that's the important part. That's why we use different tools for different, for income. We always talk about, a lot of times your advisor just talks about growing your money, but the main thing is, yes, you want to grow money, keep ahead of inflation, but if you don't have an income plan in place that's taking advantage of, getting more income than what inflation is still relatively high, so you got to be making more than, what the inflation is to stay ahead and grow your money at the same time. So if you're not really talking about income planning, your advisor, it might be time to give us a call and let us review it. It's called the Retirement Simulator. That will look at everything. An income plan comes with that.
Yeah, Alfie has over 40 years experience. You want to take advantage of his wealth of knowledge and expertise. And Alfie has put together what's called a retirement simulator process that will take a deep dive into your current portfolio to see what's really going on. He's going to expose all the hidden fees that could be eating up your returns. He's going to make sure you're not taking undue risk for the amount of return that you're getting each year. He's going to make sure you're diversified correctly, allocated properly, and he'll put side by side your portfolio with his and take you back 5 years into the past, and you'll see in black and white exactly what his portfolio would have performed versus what your portfolio did perform. So you owe it to yourself to take advantage of a wealth of knowledge of 40 years experience. He's going to add value to you. You want to pick up the phone and text the word VISIT, V-I-S-I-T, to 239-747-1077. That's 239-747-1077. We're midway through the year just about. This is the best time to get a review. You can meet with Alfie in Fort Myers or Naples. And Alfie, you review most of your clients each and every year because you want to make sure that the people that are with you are on the right course.
Yeah.
What about the people that are listening that may say, I haven't had a review in 4 or 5 years? What would you say to them?
I would say, well, that's a big problem. Because we'll review more than once a year. Some of our clients would like to review quarterly, 6 months. Typically, though, we have a policy that we want to at least see you once a year. When we do our Friday financial wrap up, that's a video that we do every Friday, and we'll send it out to our clients and just talk about the week and the other things that we're working on. Some of the new things that are here at the Advantage Retirement Group, we talk about that. But anything that they feel like that they need to talk to us about, there's always a spot there to meet with us, to a 15-minute phone call if it's to come in, or if it's a Zoom meeting. But there's opportunity to meet with us. We're expanding our team. We have few advisors here, top notch. So it's a good time to be really a family member here at the Advantage Retirement Group. And we'd love to hear from you. We're at 239-747-1077. That's 239-747-1077. We have a lot more to talk about. We'll be right back.
Welcome back to Saving the Investor, where we dive deep into the world of finance. I'm John Antonucci, alongside our resident certified financial planner professional with over 40 years experience, Alfie Townsend. Today we're going to be talking about something that's often misunderstood in the world of investing, the relationship between risk and reward. And, Alfie has put together a brand new book, his second book. It's always in high demand. He's offering you a complimentary copy of Making Waves in Retirement from Waypoint to Waypoint. A complimentary copy awaits you. All you have to do to claim the book is either call the operator or, better yet, text the word book, B-O-O-K, to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many, many stories about investors that he has helped save. That's why he's named this broadcast Saving the Investors, because he saves you from the pitfalls, the schemes, the traps of Wall Street. Simply text the word book or call the operator to 239-747-1077. Text the word book. Don't hesitate. Don't wait. Pick up your smart device and get your copy right now. BOOK 239-747-1077. And Alfie, you have a tremendous team here on site. The staff that you have here is absolutely phenomenal, but you also have partners that you work with across the country that are working with major Fortune 500 companies, universities. You've got incredible people that you have access to that the average investor really wouldn't have a way into, and you have formed these relationships and partnerships over the years that really has solidified you as one of the best financial planners, certified planners in the industry. Maybe you could talk to some of our listeners and let them know what these people do and why is it important to partner with you, because they're not just getting you, they're getting a whole team behind you.
I love it, John. Yeah, it's true. When people come in, when I first got in this business, I knew what my talents were. Okay, I knew it was planning, relationships, and finding the best of the best. Okay, you can't do everything. If people, do you manage your own monies, for your clients? And I tell them, no, you don't want me to do that, because my time is better spent putting a plan together with you, monitoring the plan, making changes to the plan. But my job also is to find managers that are exceptional, that manage, like what John said, manage money for some of your top companies, universities, states, different states. This is who they're managing money for. And with the relationship that we have with them, the strategic partnership we have with them, you're able to utilize these managers also. So think about this. You're not just going and buying a mutual fund or ETF or stocks on your own. You are getting to really benefit and getting the same management as someone that has millions and millions of dollars invested to get the same thing that you're going to get with the money that you have. So and the other thing that happens is we get to have conversation. I can give them a call and say, listen, can we set up a Zoom meeting so we can talk about what's happening out there? So this is one of the things that we're going to talk a little bit about today from this past week. We had a Zoom call with one of the top CFAs, certified financial analysts, and so we said, what's happening here? We were asking about the debt. We were asking them, tough questions, and it's just amazing how they look at it a little bit different than how the ordinary person looks at it. And one of the things were, these technology companies, we wanted to ask about technology and AI, and they said the important part of technology is that it's going to be here for years and years and years to come. And what their job is to really grow and for productivity, to increase productivity, but do it at a reduced amount. Right. Meaning they can, like he gave an example of TV. You paid for a flat screen TV 20 years ago was $10,000 for a flat screen TV. I remember those. You loved it. Yeah. It was the plasma.
Yeah. Oh, yeah. Love plasma.
You loved the plasma.
Hung on to it as long as I could.
Yeah, that's right. And so when that first came out, it was like a $20,000 TV. It wasn't $10,000. It was like $20,000. Now you can get these flat screens. He was saying for like $800. You can go to Costco. You can go
80 inches too. I mean,
yeah,
good
you
Lord.
get 80. You get an 80-inch TV for under $1,500, I say, and that not too long ago was in the thousands of dollars. So technology brings down prices, so that brings down inflation. Okay, so that's what he was saying. That will, those help bring down inflation. So, that was one of the things he said. He was talking about, I was saying there's these companies, good companies that's in some of our portfolios, and I was, asking him, some of these companies why did they go down this past, 2-3 weeks? He says, Alfie, the companies that are in this particular portfolio that we're talking about, the main companies, it hit all the other requirements, what the Wall Street wanted, but it grew at 21%, but they wanted 22%, but it had everything else, but even though it went down a little bit, that particular company, a couple of them, Wall Street had it as a buy on the dip. So this one company that they have in particular, we were talking about, they do online sales, they process that, and they're like from the Netherlands, and they're number one over there, and they're making their mark over here, and they're already at number 9, and he says they're going to be number one probably in the next 2 or 3 years. How their sales are growing, and they're loaded with cash. So companies like that are going to be around. That's what he's saying. Companies like that are going to be around, and so he was just giving examples of why companies might lose on the short term, because they didn't hit their mark, but in the long run, it's going to be just fine. And that's what, you don't want to jump in and out of stocks.
Right.
The last thing you want to do is jump in and out of stocks. And so I wanted to emphasize that. We're going to talk about having a portfolio also that is going to, we talked about having technology stocks, and everyone wants to hit those home runs, but having also some stocks that will go up and not go down as much might be good for the long haul. If you're looking for long haul trading, it's really building a portfolio that can withstand volatility.
Yeah, and you're talking about working with these companies and CFAs that really deal with Fortune 500 companies, universities, big deals. Maybe you want to talk a little bit about the fact that those that are listening to us today really can't get the pricing that you get, and how that really adds value to the typical investor that comes into your office.
Good point, John. A lot of times people come in, they could have a few $1 million in. I look at their accounts, and they're sitting in mutual funds, ETFs, and I hate to say this to them, but I say, you have a lot of money here. You worked hard. You grew your money. I said, you should be investing a little bit different. What do you mean? I tell them, well, you want things that that your grandkids can't get. Everything you have here, your grandkids could buy with $200. They could buy the same stuff.
Right.
Okay, so you want things that that you are privy to because you have a relationship with us, and that's how I like to invest. I want things that other people can't get. Okay, and that's what we do for our clients. We give you opportunities to invest with the best of the best. These managers that spend a lot of time getting these companies, vetting these companies, putting portfolios together, and giving you an opportunity to grow your money like these institutionals do with right pricing. If you don't get the right pricing matters a lot. You have to have institutional pricing versus retail pricing, but you have to have the expertise that is building that portfolio for you. So if you're not really investing, if you just have mutual funds, ETFs, and there's not really any rhyme or reason, it's a good time to give us a call. Let us analyze. We talk about it all the time. The Retirement Simulator will analyze what you have. It will go through your fees. It will go through your asset classes. It will go through your holdings. Are you holding long-term bonds, short-term bonds? Are you holding small cap stocks, large cap? What are you holding? And then what we'll do a side-by-side comparison of what we would be doing for you, and then you can look at it black and white. We'll be in color, if it makes sense. And my friend always says, if it doesn't make sense, it doesn't make dollars. So let's see if we can put something together for you that makes sense, and that is a plan that's an everlasting plan, not one that's here today, gone tomorrow.
Yeah, you owe it to yourself to take a look at the advantage difference. And Alfie Townsend is a certified financial planner professional. He's also a fiduciary, which means his responsibility is to you, the client, not to any products or services that he offers. Alfie doesn't stock pick, market time, or track record invest. He's going to put you in an income plan and a strategy that's going to get you to and through retirement. You owe it to yourself to compare the advantage retirement difference compared to what you've been invested with all of these years. Pick up the phone. Don't hesitate right now. Just text the word VISIT, VISIT, to 239-747-1077. You can visit with Alfie in Fort Myers or Naples. He has 2 beautiful offices, and he'll take a deep dive into your current portfolio and see what's really going on. Make sure that you've been rebalancing. That's something that we talk about on the broadcast all the time. You could be out of balance because of the change in the stocks and the equities, and you really want to be a 50-50 mix or a 70-30 mix. Let Alfie take a look and make sure that you're setting a course towards retirement. 239-747-1077. Don't hesitate. We're going to be right back right after this break, so don't go away.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, known as Southwest Florida's certified financial planner professional, here with my good friend, Pastor John Antonucci, and we are here to really talk about how we can save our investors from making mistakes that are commonly really made and keep you from making them, and hopefully save you thousands and thousands of dollars in the meantime. So welcome to the show again, and here's Pastor John.
Yeah, welcome. Welcome to Saving the Investor radio broadcast with Alfie Townsend, certified financial planner professional with over 40 years experience as a CFP. Today we're going to be talking about the relationship between risk and reward. This is a topic that you're really going to want to stay tuned for. But Alfie does have an offer for you that his book is always in high demand. And if you have not got a complimentary copy of his brand new book, Making Waves in Retirement, my question to you is, what are you waiting for? It's free. And as I always say, if it's free, it's for me. All you have to do to claim your free book is text the word book, B-O-O-K, to 239-747-1077. And I know a lot of you don't text. You never got into that area. But you can pick up the phone and call the operator as well, 239-747-1077, and ask for a complimentary copy of his book that will be sent out to you. You don't want to miss this fulfilling guide to retirement that he's put together for you, including valuable insights and many, many stories about investors that he has helped save. Simply text or call the operator, B-O-O-K, to 239-747-1077. And Alfie, you came across an interesting article, discussing the relationship between risk and reward. And it seems like there's more to it than meets the eye, because everybody wants the reward, but nobody really wants the risk, do they?
You're right, everybody. It's amazing. They see, like, for example, I play golf with a lot of doctors, and they see, oh my goodness, he has a great job, he's saving lives, he's making money, they're doing this, they're doing that, but they don't see what it took to get to that point. Right? They look at the shortcut, saying, they just look at the end result, and a lot of times to get to the end result, you have to put hard work and hard time in it. And the same with investing. And if you're giving up a lot of your returns when the market goes down, it takes a lot more to get that return. That's what this article was about. So we're going to share a little bit about that and how to really take advantage of a market, what it gives you, and look for good companies that are in there that are not you're going to have some that are going to just, like NVIDIA just went through the roof. That's one of those companies that, and look at Microsoft. It's through the roof now, but that company just stayed.
It's been solid a long time.
No, but it didn't grow for a long time too. In the early 2000s, everybody was beating them, and Apple was crushing them, but it caught hold, and it just started to grow. But what the article was talking about is a statistical relationship between risk and reward, and it's not linear. Meaning, in fact, to justify taking on a double risk, that means that you would have to really produce 4 times more return to take on double risk, okay? And are you getting rewarded for that? A lot of times you're not. It's called volatility drag. I don't want to get boring with this, but what you want to think about is this. if your portfolio has a return of 10% in 1 month, and then it loses 10% the next month, you would think, well, okay, I'm even. That's not true. Despite the average return of 0, that's the average return. Remember, that's what Wall Street talks about all the time. We talk about this in the workshop. If you had a portfolio that made 10 1 month and lost 10 the other month, you would think, well, the Wall Street says the average is 0, and that's true. The average is 0, but in reality, you have to take a deeper dive on that, and it's actually you lost 1% on your investment because it takes that much more to make it up.
Right.
Because if you lost $10 on $100, now you only have $90 in there, right? And you make 10% on $90, that puts you at $99, so you're down $1. So if you're doing this for a long time, and just think, so volatility, if it's 20%, now you got a 20% down. And if it lose, and then you make 20%, lose 20%, now you have to make up 4%. You have to make up 20, and then you're down 4. So it's not lineal. That's what they were saying. Like if you had a portfolio that wasn't growing as much, but it made 10%, but it only lost 10% because it's not as volatile as the one that made 20% and lost 20, and made 20 but lost 20. You're only down 1% on the one that lost 10, but the one that lost 20, you're down 4% after making up 20. So the thing about it is to have a portfolio, and what I always talk about is income planning. So, let the markets do its thing. The markets are going to go up, it's going to go down. You got to get good companies in there, but the main thing is you have to have an income plan. If you have income coming in, regardless of what the market's doing, you're going to be just fine, right? If you have, someone that comes in that has a pension, John, man, they're set. They're set. If they have a $100,000 pension, we have clients at New York police departments. They're retiring with over $100,000, $150,000 of pension, coming in.
Yeah, that's
and now, one of my friends I play golf with, his dad is a doctor over in, where is he? Illinois, right? And they're looking to impose a exit penalty for anybody moving out of Illinois to other part of the somewhere else in the country. And it's substantial, he was telling me. So his dad's thinking about getting the heck out now.
Yeah, that's crazy.
Before they have this exit penalty, and a lot of states are starting to do that. New York's been talking about it, and I don't know if California has it or not, but just think about it. You made money there, and you worked your butt off. You got up every day, went to work, did your job, and now you saved money, you saved right, and now all of a sudden you want to move because it's just you can't afford it there, or you don't like what the politics there. You want to just get the heck out of there and come to Florida or come to Arizona. And if they're hitting you with a 10% penalty, could you imagine that? You sell your home. You sold your home, and your $1 million home, they hit that with a penalty. Your retirement hit with a penalty. Your stocks, they hit with a penalty. That's what they're talking about. These are the blue states that are doing this.
Yeah, aren't they even talking about unrealized or assumed earnings, of taxing that? How can you do that?
Yeah, how can you do that? Yeah, it's unreal what they're. But with taxes, this is a good point. With taxes, expiring soon, and then the rates, and is it time to do a Roth conversion? We're still low. Could be a time to do a Roth conversion, and we have a program that will let you know this is the taxes that's owed on this money now. And we show you by letting it sit there and grow tax free how to take advantage of that and have to have tax free income versus having to pay a high tax on that. So these are all things that we look at here at the Advanced Retirement Group. We are trying to get you some tax free money, and put you in a situation where your accounts aren't going crazy, especially with the ones that you're taking income from, and then growing your money to fight inflation. As you can see, this is very complicated when it comes to retirement and doing it on your own. Yes, it can be done. But, can your spouse do what you're doing? That's what I always say when a do-it-yourselfer comes in. Can your spouse do what you're doing? And a lot of times people come in that's been doing it their own self, John. They realize that, you know what, I'm getting up in age. I'm not as sharp as I used to be. Or even if I am as sharp as I used to be, I don't have the energy I had. And I don't want to sit by a computer when I could be out playing golf, when I could be out traveling. I want to change my life. So that's why they come to us and take over on the ones that do it themselves.
Yeah, you want someone with 40 years experience as a certified financial planner professional. And Alfie has two beautiful offices, Fort Myers or Naples. He talked about the taxes, and it's important to note, whatever tax bracket you're in, everybody feels like they're paying too much in taxes, and taxes are ever changing in our lives. So you need a tax plan. Alfie has put together a program that can really address your tax situation, and it's a plan that addresses uncertainties and instills confidence in your future. As a certified financial planner professional, Alfie has created a tax map that strives to help you achieve three important goals. Number one, lower your tax bracket. That's going to put more money in your pocket each and every year. Number two, protect your money when taxes do rise. And number three, create a tax-free income. You want to be one of the first people to get a hold of this brand new tax map that he's put together. It's absolutely free. All you have to do is either call or text the word tax, T-A-X, to 239-747-1077. If you text the word tax, it's going to take you to a landing page, and you'll be able to check out and get that important information. Don't hesitate. Pick up the phone, call or text the word tax to 239-747-1077. Get a hold of Alfie's tax map. It's really the time to minimize future taxes and generate tax-free income now. Call or text the word tax to 239-747-1077. Alfie, no matter what bracket somebody's in, nobody's ever happy paying taxes, but you have found ways to reduce their tax liability with certain investment strategies that you have, and really that goes a long way, especially for retirees that are, depending on Social Security and pension and their investments. They want to lower that tax basis.
Yeah, anytime you can lower your tax basis, you're increasing your returns. Okay, if you're not having to pay as much out, that means you're making more money. If you have to take out $50,000 and for an expense or for a new car or whatever it is, and you have to take out $75,000 because you need a net $50,000, that's $25,000 that you have to pay extra. If it was tax-free money, you take out $50,000. That's all you need. You take out what you need. So it saves you a whole lot in the long run, but it does hurt a little bit because you got to pay now. Like Fram Oil commercial, we all know about it. Pay me now or pay me later. And if you want to pay now to get a benefit later, give us a call. We'll be right back.
Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. Alfie has over 40 years, that's 40 experience in this industry, and he's come out with a brand new book called Making Waves in Retirement. Complimentary copy is waiting for you. All you have to do to claim yours is to either text or call the operator. You could text the word book to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. Don't miss out on these valuable insights, including many, many more stories about investors that he has helped save over his 40 years career. Text the word book to 239-747-1077. Don't hesitate. Do it right now. Pick up the phone, call the operator, or text the word book to 239-747-1077. And Alfie, we want to talk about Warren Buffett. He's got many great quotes. One is be greedy when everybody's fearful, and really be cautious when everybody's greedy. He really has made some money in the investment industry. You've looked at some of his success platforms, and really you implement some of the principles into your investment strategies, don't you?
We do, and this is something that Warren Buffett. Look, you're not going to always want to invest just like Warren Buffett does, because you're going to, some of our clients say, listen, I want some safe money and I want some growth money and grow with caution, and then I want some income money, then I want some accounts that I can hit some home runs on. So you always want to have those. But what Warren Buffett, we analyze him and his performance, and one of Warren's main success is his favorite. He's going to be more on a conservative side. He wants to buy cheap and safe quality stocks. Now, what does that mean? Well, conservative stocks that are trading for, and this is called low price to book ratios. That means the money that they're making, the money that, after expenses, it's worth it's a low number. The lower the number, the better the price you're getting that stock for. And then you want to have low betas. And that just means that a beta 1 is technically the market. So if your stock had a beta of 0.08, let's say, that means it's 20% less volatile than the market. So you want to have a lower beta, 0.7, 0.6, whatever. Like bonds are like a 0.20 beta. So it's like 80% less volatile than the market. So they're looking for companies that are low betas and cheap, in a sense of buying that stock. But they also want a company that's growing their profits at or above average rate. So they want that company to keep moving, to keep, so they're asking for a lot. They're They're looking for companies that are cheap to buy, that have a low volatility, that's growing above average rate, and that's paying a significant portion of their profits as dividends. Okay, so these are companies that pay a dividend. Apple's starting to pay a little bit of a dividend. So, he owns a lot of Apple.
Really?
A lot. He's one of the largest stakeholders of Apple.
He probably got in at the ground floor.
Yep. So he's looking for this combination of companies, and that's really still growing, buying it cheap, low volatility, and so these are things that Warren looks for. But these, that's not. It's been a very, very good recipe for Warren Buffett for his whole life.
Yeah, and he doesn't really, buy and sell,
No.
stock pick, that type of thing. Track record investor. He pretty much stays, even in market turmoil, doesn't he stay the course?
Yes, he does, and he'll buy more at market. So that's the thing. You got to be greedy, like you said, when everybody's fearful, and fearful when everybody's greedy. So when everybody's greedy, that's when the markets are all-time high, and everybody wants that NVIDIA, wants that hot stock. But then when the market starts to go down, the fear factor comes in. And the fear factor is sell. I need to sell. I need to get out. I don't want to lose it all. This is the worst thing, right?
Right.
And that's when everyone is not thinking rational. They're thinking fearful. And that's when Warren Buffett starts rubbing his hands.
Buying opportunity,
You
right?
can hear that? It is a buying opportunity.
Yeah.
And, and that's when, it's like, for example, our house, when we first moved here, back to Florida. Remember, I grew up in Florida in the 60s, so in the 70s and the 80s, moved away in the 90s, came back in 2008. But in 2008, our neighborhood, Town and River, was nothing but for sale homes,
Right.
for sale. If I had the money at the time, I didn't. But if I had the money at the time, I would have been buying those homes up, but no one wanted them. You want to buy when no one wants them.
Right.
That's hard to do.
Yeah.
And you saw it happen in 2020 when the market dropped 30%. You're thinking, oh my gosh, the world's coming to an end.
Sky's falling, right? That's what those commercials.
So that's when you have to. That's where I say at the Advantage Retirement Group, that's where we keep you focused. We keep you focused on the long term. And that's where our managers are making money for you. They are buying. They are doing things that they're supposed to be doing because there is no emotion involved with a money manager. They know what they have to do, and they're doing what they're supposed to do. And said if you're doing it yourself, you're most likely a lot of times doing the wrong thing.
Yeah, so everybody wants the reward we talk about but don't want the risk. How do we find the balance between risk and reward?
Well, that's a great question, John, and you find the balance really by having a great portfolio that separates things, where your income's coming from. Remember, we want to create income from something that it doesn't really matter what your accounts are doing, because you're going to get that income, and we're going to have money that is for the long term, that's going to grow, And we're not looking for it to go up and down. We don't care about that. We just want it to grow. And then you're going to have a balanced portfolio, like Warren Buffett said, that's not going to go down as much, but it will go up because of dividends and growth. So it's a combination of everything.
And you have a tool that can assess somebody's risk rather than just saying what's your risk factor from 0 to 10. You have a way of really finding out, don't you?
Yeah, the tool that we use, John, it was put together by a team of psychologists, and they're good questions, and it comes out with a number and with the dollar amount that you're talking about, and it shows you with 95% confident, how much you would be making and how much you would lose with the way that you answered these questions. And it's a lot better to do it this way than just say pick a number between 1 and 10. So this is, as you know what your number is, it's a true number, then you're not going to panic, and we're not going to let you panic.
That's what's dealing with a certified financial planner professional will do. He adds value to you in so many different ways. You're just hearing us scratching the surface today in this broadcast. And, Alfie does have a valuable resource that he's making available to his listeners today. It's called his Retirement Toolkit. It's your key to a worry-free retirement. You don't want to let economic uncertainties hold you back from securing your financial well-being. Inside Alfie's toolkit, there's a wide range of materials that you can have complimentary. Will your money last as long as you do? He'll answer that question and really show you how your money can outlive you. Are you paying too much in taxes in retirement? If he can reduce your tax base, like we said earlier, that's going to put more and more money in your pocket each and every year so that you can do the things you enjoy, whether it be boating or golfing or traveling, whatever it is that you like to do. The Social Security Decisions Guide is in there, when to maximize or take the opportune time to get your benefits. And will a recession, if we have one, rob your retirement? All you have to do to get Alfie's free toolkit is simply text the word KIT, KIT, to 239-747-1077. Either call the operator and ask for it or text the word KIT to 239-747-1077. It's time for a worry-free retirement. Get Alfie's toolkit right now. Pick up the phone and call or text the word KIT to 239-747-1077.
John, when we have shows like this, I get excited. And then this is why we do the show we do, Saving the Investor. It's really all about giving information that's not fake information. This is, it's not fake news. This is stuff that really it's live. I mean, if you don't panic, if you have a plan in place, you're going to be just fine. And the world is hectic out there right now. There's a lot going on, and if you can just put that noise aside. That's what we do here at the Advanced Retirement Group with our clients. We say, listen, we know what's out there. We're not dumb. We're hearing what you're hearing, but we have a plan in place. As long as you have a plan in place, you're going to be just fine. I don't know if you ever seen our TV show called Saving the Investor. It's on NBC2 right after Meet the Press. We have Craig Wolf on that show, Mary. We have David on there. So it's a great show, and we talk about the same topics we're talking about here, but you get to see them and see us. I hope you watch it at 11 o'clock, 11 to 11:30 every Sunday. And, of course, right here on 92.5, we've been on this station for, 11, 13 years now maybe.
Please.
Yeah, it seems like forever. And Jake the Millennial makes us sound good, so keep on doing it, Jake. Until next week, everybody have a fantastic week and be safe and be blessed.